RIUNIT podcast.
Episode 14. Real estate and construction in Sri Lanka. What's really holding growth back and what unlocks it? Presented by Roshan Madawela, CEO and founding director of the Research Intelligence Unit. Joining the discussion are architect Nilesh De Silva, a fourth-generation architect at KDS, and Romali Tudawe, CEO and director of Tudawe Brothers.
Good morning, good afternoon, and good evening wherever you are. Thank you for joining us. Today, we are joined for this podcast by two very distinguished guests. Firstly, architect Nilesh De Silva. He is a fourth-generation architect at KDS who have a 45-year track record in Sri Lanka, and they have been at the front line of transforming Colombo's skyline with recent projects that include the US Embassy, the London Stock Exchange, as well as having completed Sri Lanka's first ever system back in the 90s. A big welcome to you, Nilesh. Sorry, I should also add that KDS is in the UK, in Vietnam, Cambodia, and Malaysia. Thank you for joining us, Nilesh. We also have the great day of having Romali Tudawe. Romali is the CEO and director at Tudawe Brothers. She's also a barrister and an attorney of law. She has an LLB from the London School of Economics and an LLM from Stanford. Tudawe Brothers, many of you may have heard already, has an 83-year-old history in Sri Lanka, and they have completed over 1,200 construction projects. A big thank you to you, Romali, for joining us today. A big thank you to Team RIUNIT for making today's event possible. And last but not least, a massive thank you to Fitzair, Sri Lanka's first ever private budget airline. Currently, Fitzair flies from Colombo to the Maldives, Male, Dubai, KL, and Dhaka. And they have now introduced business class as well. So it's a great opportunity for everyone here to try them out. And I'm excited to also say that there's planning to add 3 more destinations this year. Really looking forward to that. Let's start with our view on potential. So myself, as well as many people I speak to in the industry and beyond, and in Sri Lanka and elsewhere, believe that the real estate and construction sector have a potentially much greater role to play in Sri Lanka's economy, has a greater potential than what is being leveraged at the moment, and can contribute a lot more to the national economy, GDP growth. Just to give you a context, before the economic crisis, real estate and construction certainly was contributing double-digit growth rates towards the national economy, and real estate was contributing about twice of what it is contributing at the moment. So let me turn with that to Nilesh, or to Romali first. Can I get your views on what you feel will be the actual contribution that real estate can make, and what is the potential? How can we better leverage real estate and construction to facilitate the kind of economic growth that everyone talks about. And, we need to kind of get there. Right? Over to you.
Um, Thank you, Roshan. So the relationship between real estate and construction is that real estate is a fixed, limited asset in the country. And therefore, the value of that is very high because there's a limited amount at any given time, unless you're expanding like in the port city. So it's a highly liquid asset and it's concentrated among various sectors, especially the state. The private sector has a small percentage of it. And it's really what you do with this land bank that matters for economic development. So in doing so, I'll show you the relationship between construction and real estate. So if you have this liquid asset, you also need to add value to it. And for it to generate income, you have to have some sort of infrastructure from it. So that's where the construction companies come in. And with relation to economic growth, I hope you can share this, see the screen that I'm sharing. This is a data set that I did for last year. That's why I only have 2024. For 2025, I need the financial year to end. But what you're seeing here is construction activity in the orange line and the correlated GDP in the blue line. And you may have heard this term that construction is the barometer of the economy. And I think this graph really shows what that means. Whenever there is a construction dip, there is a 2-quarter lag in the corresponding GDP dip. And when there is a construction pickup, it picks up 2 quarters before the GDP picks up. Now, what you're seeing here in Q2 in 2024 is an election month. So as you can see, to the run-up of the election, you see a lot of construction activity declining and booming once again after the elections are over. So this graph shows that there is a positive, strong correlation between construction activity and economic development. If you're just going to go a little bit below to where we are now, one of the key metrics that looks at construction activity, especially through the central bank and institutions like the ADB, is what we call construction PMI, that is Purchasing Managers Index. If it is 50, that means this is based on a survey that they send out to our construction companies. We also fill one in. If it is 50, that means you're stagnant. There's no growth month on month. But if it is above 50, that means there's an expansion. That means you're procuring more material. So there's obviously more expansion. And if it's less than 50, that means it's a retraction. So since September 2024, that is the period of the election, there's been continuous construction growth that's been taking place. So I'll just stop sharing the screen now. So what this is indicating to us is that there is a strong potential for development. Sorry, I'm just trying to find out. Just stop the sharing. So what this is showing now is that there is quite a lot of demand that's coming our way because of the pent-up demand that hasn't been deployed in the last 2 to 3 years. So with that, I want us to also understand that demand growth doesn't necessarily mean there is sustainable. So what we're seeing now is volumetric growth. There's a lot of projects that have been frustrated due to the economic situation that are now coming out, especially in the private sector, which started about a year and a half ago, and the government sector is now allocating capex again. So I want to make a similar demand growth to post-war economy, where there was a lot of boom in the economy, but this was due to pent-up frustration. So we have to make that distinction between catch-up and new demand. So for us, the key segment is to have sustainable development of construction and real estate, rather than having a really rapid pickup when there's pent-up frustration and then this flatlining again. So when you're looking at double-digit contribution to the economy, construction has always historically been between 7 to 8%, sometimes 9% of GDP. In 2015, this went up to double digits, and that's because there was an anomaly. There was a port city construction that took place, which the government decided to include into construction GDP. So though there is growth, there's a pickup, it's still catching up. The figures that you're seeing has to be interpreted in a sustainable way, and it has to be attributed to whether it's pent-up demand or whether it's sustainable demand. And for that to happen, we must have continuous momentum from the public sector and the private sector. With this, I'd like to add one more aspect to it. In December, we were subject to a cyclone disaster, and that has left a lot of damaged infrastructure. Again, it's debatable whether if you're rebuilding something that was damaged, whether it's growth or whether you're restoring. So that's one issue that we have to debate at some point. And the second aspect of it is regardless of whether we are rebuilding something balance sheet wise, it's definitely going to create economic activity for a lot of the contractors. So when that opportunity comes, we have to make sure that the contractors are sustainable enough to handle these projects. They're coming at very short time periods. It's rapid tendering. So the tendering time span is about 7 days. The construction industry has also been talking to the authorities to say how you can make this a streamlined procurement system. So we've actually asked them to have a baseline cost. This is called the HSR rates. And to ask the contractors to mark up whatever they want based on this basic cost so that there isn't any price gouging that's going on. And the final aspect we requested from them is to equitably distribute them to stop very big companies with large infrastructure and machinery from grabbing projects. So the government has actually now started this rolling out. The only thing they haven't done is equitable distribution, so they're still tendering. So we're going through that first round. This is about 40 billion right now. And it's going to go up to about 200 billion. And the project timelines is between 3 to 6 months. So you can see the amount of activity that's going to take place in a very short period of time. So these are the statistics that I have at the moment to show about the growth momentum. And I think there's a little bit more discussion about what these data means in real terms. So I think there's definitely potential. The one thing I would say is stop looking at it from a project to project view. You have to look at it from an ecosystem view. So from the ecosystem view, the banks have to be prepared for this boom. That means they have to run faster with their securities, big bonds, and financing. The procuring authority, that is the government, has to run efficiently. They can't have long timelines when they're procuring projects, and efficient expansion of capital for the projects that they're undertaking with the contractors. And the contractors also have to realize the environment is different. So a lot of planning, a lot of monitoring, early action and risk mitigation is required to survive in this environment and to support the boom that's coming in the future. So that's kind of like a snapshot of where I am at the moment with construction.
Thank you, Romali. Excellent insights into this sector. Actually, it was really interesting to see the comparison between the GDP growth rate and the construction sector, because a lot of studies have been done at universities, local as well. More two universities show the very close correlation between construction and economic growth. I mean, it's difficult to understand it because one causes the other, or is one occurring as a result of the GDP growth rate. So it's a very entwined, interconnected relationship, I think. It's something we can dig into a little bit more. Just before I move to Nilesh, now you mentioned something about the difference between actual growth and the quality of the growth. And that's a concern. Is that partially because before the last couple of years, there was a lot of projects that were canned or held back due to the economic crisis, and many of the smaller contractors, maybe the larger ones as well, were on their back foot. So now they're in a position where they may even take projects at a loss because it represents a better situation than they were in 2 years ago.
Absolutely, you hit the nail on the head. In relation to the first part where you say, how is this relationship formed between GDP and construction? It is indeed cyclical. So it's a positive feedback loop as well as a negative feedback loop. But the reason why I personally believe that construction has such a big impact on the GDP is because of the range of stakeholders that are taking part per project. So on the top level, you have the employer, the consultant, engineers, architects, and also you have the banks. So those are the three main formations of the contract. But on the bottom level, when you're doing construction, you're engaging the full spectrum of our labor strata. So you're having like the very highly educated professionals delivering services. Then at the very lower level, you have skilled, semi-skilled workers, day laborers who work at construction sites. As soon as a construction site comes, someone pops up and puts a canteen. So there's a lot of ecosystem that goes around in this, and it's the quickest way to infuse money into the economy with a trickle-down effect, because this money is going to go into transport sector, lorry drivers, it's going to go into quarry crusher operations, it's going to go into earth movers. Moving on from that, it's going to go into steel, cement, hardware, blocks, anything to do with whatever the physical infrastructure is, and moving that infrastructure. Everyone gets involved in that cycle. So it is truly spreading its way across the economy when you have sustainable construction. To your second question, slightly troubling data. Let me just put the screen up again. So what we have done here is that we have tracked the bidding data of infrastructure projects in Sri Lanka for the last 2 years. What this percentage is showing is the deviation of the lowest bidder from the engineer's estimate. So I'll preface this again. This is all public procurement data, data that we have taken part in, and it's showing the difference between the estimate of the employer for construction cost and the lowest bidder. So it's a demand and supply chart. I'll quickly explain what is an engineer's estimate, and it's on this top line here. That is the government's own professional calculation of what is a fair and reasonable cost of construction should be based on market price. So that's the definition we have to keep in mind. So when we're going back to this chart, you can see in 2022, the lowest bidder bid 10.41% above the engineer's estimate. So when in a time of normal construction activity, what you can see is that even the engineer's estimate is conservative, and the lowest bidder for this project is going at 10.41%. Now, as we hit the crisis, February onwards, you can see now the lowest bidders are sort of experimenting on where they have to be to grab jobs. So it's now the margin is lowering to +2.4 to +3.94. Someone's tried to bid a bit lower, and you can see that there's an abrupt halt in government activity because capex spending was stopped for about a year and a half. That's why you don't see 2023 data. Now come 2024, when the government allocated 1.3 trillion worth of capex for that year alone, a lot of projects started rolling out without any indication of the actual volume that is available in the market. Now, when projects suddenly become live and the tendering process has started, you can see, as you mentioned, a lot of contractors who've not had jobs for the last 1.5 years, especially in the infrastructure sector, frantically bidding to get jobs. And what you're seeing here is suicidal bidding. As more and more projects are being rolled out and contractors are not successful, they are now deviating beyond 40 to sometimes 50% of the engineer's estimate. So what this is showing is that the current pricing structure, the current supply for the demand of construction from the government sector is highly financially unfeasible. And you can see from the increasing of the suicidal bidding or the race to the bottom, where contractors are now bidding to get cash flow because you get a 20% advance. This is the reason why, and I've had chats with many professionals and contracting companies, and this is a very dangerous trend that's taking place. One is, for the basic cost of construction, you require 3 M's, that is man, machinery, and material. In infrastructure projects, not in building projects, in infrastructure projects, machinery is roughly 30 to 40% of the total basic price. So what happens here is machinery is already purchased by the contractor. So they don't have a cash out expenditure. What they have is a depreciation cost, and that is an accounting cost that affects your P&L. But this doesn't have a cash flow out impact. So the contractors are erroneously using this in order to cut 30% of their pricing. However, we argue that this is a fundamental pricing error because ultimately, Roshan, I think we all agree, cash flow meets revenue. So if your revenue is below your basic cost, including your depreciation cost of your machinery, this sort of pricing is going to show up in your P&L and your balance sheet. So it's going to eventually erode whatever value your balance sheet has, and is going to start going into negative equity, which is already happening in the market. So when you don't price 30 to 40%, thinking there's no cash out expenditure, this is a fallacy. There is actually a cost to this, you just can't feel it. So what does this mean? This means that all of these projects that were given to the lowest bidder or the second highest bidder, which is not far off from this underpricing, all of these projects are going to be immediately financially non-feasible. So what does that mean? That means that there is a risk of non-completion. There's a risk of substandard work because you haven't priced for it. There's a default risk to suppliers and subcontractors because obviously your cash flow is going to end up at a loss. And you're eventually going to start impacting the banks when you can't perform, and the government employers or private sector employers are going to start lifting your performance bonds and unrecovered advance bonds. The other aspect of it is those companies with very large fleet of assets that have idling machinery for the last 2, 3 years that's hitting your P&L, they are going to start grabbing projects at a higher rate at a lower cost. And that creates the risk of monopolies, which again, we have seen in the bidding data, a large concentration of jobs between major contractors in the last year also going at an underprice. So this is why I meant there's volumetric growth because the PMI is so high at the moment. But the actual reality of it is that this is not real growth and is not sustainable. Why do I say that? Just one more thing before I move on. At the moment, there is no government procurement guideline that is a fail-safe for financially unfeasible bids. In previous years, you've had a safeguard where some governments have said 15% below the engineer's estimate, you're automatically disqualified. That was later moved to 30% and you're automatically disqualified. As you can see, when the country is moving closer and closer into insolvency, some of the safeguards have been taken out. And right now, there is no safeguard for financially unfeasible bids to be removed from the procurement guidelines itself. So when we talk about growth, and especially growth measured under the Purchasing Managers Index, this is what it does not show. It doesn't show project profitability. And as you can see at the previous prices, there is no profitability. It doesn't show the quality of demand and supply. And by this, I mean the quality of demand, that is what is the government looking for in the infrastructure project, is weak because they're looking for the lowest cost. What is the quality of supply? Also weak because you have desperate bidding from contractors who kind of don't understand the actual long-term impacts on their P&L balance sheet and project feasibility. What do I mean by the non-availability of sustainable development is because we have at this moment no idea what is the future pipeline going to be. So if contractors have an idea of what their pipeline is going to be, they'll know how to use the market information to specialize in an area, to mobilize their resources, like for example, ready-mix plants, quarry crusher plants, asphalting plants. So they have the opportunity to strategize and move into strategic locations rather than shoot at everything that's coming up and hoping to get it at a low price. So the long-term sustainability pipeline is not available, which is absolutely required for anyone to plan their market. The financial health of the contractors is definitely not showing from this. And you will see how many of them are in NPLs with the banks. And high PMI can coexist with weak margins and cash stress, which is what is going on in the market at the moment. So whatever was rewarded last year at those prices is going to start showing signs of those weaknesses this year onwards. So this is where I say it's going to get a little tricky, and we are probably going to have a systematic risk if we continue with this trend.
Yeah, we can see that. Thank you, Romali. Very comprehensive response. I think to a large extent, we're witnessing the time-lagged impact of the crisis and, a period of when donor-funded projects in all sectors, including real estate, were put on pause. And then there are many, the construction sector suffered greatly in terms of bankruptcies and also layoffs, etc. So we hope the story behind the numbers there continues to improve, but understand the challenging situation at the moment. turning to Nilesh, the other side of the coin in real estate, as it were. What are your thoughts on, first of all, how Sri Lanka can better leverage its naturally endowed blessings, where we have a real estate market that is boxing below its weight at the moment? How do we step that up and utilize it to a greater extent to contribute to the economy? Over to you, Nilesh.
Thanks, Roshan. So let me look at it from more of a holistic point of view. I'll leave all the numbers and figures to my partner in crime. So actually, it's a very pertinent question that we are dealing with now, because I think globally, real estate and construction are just not sectors. I mean, they are more economic multipliers. In Sri Lanka, as far as we see, the construction traditionally, like Romali said, contributes 6 to 8% of the GDP, but its indirect impact through jobs, material, finance, logistics, services, I think is much larger. The opportunity is there. The question is, how do we unlock this strategically? So a few years ago, there was a strong push under the Western region megapolis vision to transform the Western province into an integrated economic hub. While that large-scale program did not fully materialize as originally envisaged, the underlying principle was correct. Real estate must be tied to infrastructure, economic growth, and long-term planning, not just standalone developments. Today, a more pragmatic and active example of this would be the Colombo Port City. The project represents a structured attempt to create financial and business district that attracts maybe FDI, international firms, high-value services. But actually, if it is executed and supported by policy stability, it can become a real powerful catalyst for commercial, hospitality, and residential growth. But when you look at it beyond flagship projects, I believe Sri Lanka can leverage this in four key ways. The first one would be to link the real estate to an economic productivity. We must move beyond the speculative apartment developments and focus more on business parks, logistical hubs, industrial and export zones, knowledge and tech campuses. So when real estate supports industries and services, it strengthens the balance of payments and create actually sustainable jobs. The next angle, how we see it, is that the transit-orientated and regional growth. Instead of concentrating development only in the city of Colombo, we really should invest in, rail modernization, mass transit corridors, regional urban nodes in cities like Kandy, Galle, Jaffna, Kurnagar, you name it. When infrastructure improves connectivity, land values increase organically and private investment follows. This creates actually a structured urban growth rather than the standalone congestion that we are dealing with now. The next point is, this is spoken about a lot, but it still has its merits, it's how to attract the diaspora and the foreign investment through policy stability. See, investors are not looking per se for returns. It's nice to have. I think they're looking more for predictability. Clear land titles, faster approvals, consistent tax policies, transparent regulations, and all of this will unlock your diaspora investments, regional South Asian capital, long stay, and maybe the retirement market. hospitality, mixed-use development, and purely because of Sri Lanka's geographic position, it's very strategic. But policy consistency is what we need to convert interest into capital. The fourth item is like what was mentioned before, is to embrace sustainability and smart development. See, emerging markets in South Asia are rapidly adapting to green buildings, energy efficient design, smart infrastructure, prop tech, and digital sales platforms. Sri Lanka is in a real good position itself as a sustainable tropical development model, especially with our climate tourism appeal, which is going on now, and you can see it, design expertise. So sustainability is no longer optional in our eyes. It enhances asset value and long-term resilience. So the big picture for this question, what we were thinking was, see, if it is structured correctly, real estate and construction actually can hold hands and generate large scale employment, stimulation of maybe 40 plus supporting industries, obviously attract foreign capital, improve urban quality of life, and then obviously all of this will lead to strengthening of your GDP. But the key integration, aligning development with infrastructure policy, productivity, and sustainability. See, it's not about building more. It's about building strategically. Personally, I feel if we do this, real estate can absorb uh, and absolutely become one of the strongest engines in the Sri Lankan economic recovery and also in the long-term growth. I hope that answers the question.
Yes, it does. Not only answers the question, it actually opens the door to greater discussion. I mean, you have mentioned the importance of having a coherent strategy that benefits. So, in a sense, to use cricketing terminology, to set a field and bowl to it, something that, for some strange reason, Sri Lanka has not been doing. And it's a shame because real estate and construction in countries like Thailand and Dubai have demonstrated to be, the leading contributor to GDP growth. Not just also ran, but one that has taken the lead and given, as you said, Nilesh, the naturally blessed environment that Sri Lanka is, it's ideal for real estate development and for hospitality and tourism. It is representative of a failure to factor in things like infrastructure which are needed, rather than, as you said, build blindly. So, according to Savil's report of last month, there's $1 trillion worth of real estate investment which is going to be floating around in 2026, right? And emerging market share of that FDI is increased by 10% and set to increase by more this year. To put it in context, that's like 2,000 World Trade Centers, right? A trillion dollars, just as a back of the envelope calculation. So if Sri Lanka can attract maybe at least 3 or 4 of those, then that could be seen as a positive move in the right direction. But then international investors look at things like, of course, GDP, then, as you mentioned, institutional factors, right? Property rights and where the demographics are heading. Tourism is another huge driver. And we see that in our data, which I'll come to. But before I share some of the market data, can I ask you, Nilesh, what type of new FDI as well as local investment is coming into real estate? What's driving it? Is it the residential sector? Is it apartments? Is it residential housing or villas? Are we looking at commercial making a rebound, retail or hospitality? Um, it would be interesting to know which of those subsectors. Sorry, warehousing is another important one, which I think is of significance to both of you here today, right? So, which of these sectors are driving it, and why do you think that is the case at the moment?
Um, so Roshan, I'm not too much of an expert on this, but I will still answer your question. So if we look at real estate today, uh, in Sri Lanka and or across Southeast Asia, we are just not seeing capital moving. We are seeing a redefinition of what investors believe cities should become. The new investor is not only asking what is the return, they're asking what is the long-term relevance to this asset in this changing world. So a few things that we see is in Sri Lanka, the local investors remain the foundation of the market. You see your primes and your homes and all of those developments, you can see that is a significant movement, even in the way you see the social media advertising and the big spenders, all of that. You see that, but these guys are evolving. I mean, that's our local investors. So today's domestic investor, they are more design conscious, more sustainability aware, and more long-term focused. So they are investing in residential apartments, gated housing, suburban townships, not simply for speculation, but I feel that it is for more lifestyle stability and more of a generational value. See, as infrastructure expands and connectivity improves, we are seeing secondary nodes transforming into future urban cities. The opportunity is no longer confined, like I said before, to central Colombo. It's about these emerging corridors. So, what's particularly exciting is the renewed interest from overseas Sri Lankans and regional investors. Like I said before, this is what it is. And there are now, even if you see our property developers, they are catering for these guys. So what it is that it is happening. So they are looking at, I would say, I mean, the global and diaspora investors, they are looking at more of a luxury residential developments, branded developments, mixed use waterfront environments. And if you see, like we do a lot of work in India as well, and the models are far beyond what Sri Lanka is now. And you can actually map out and see uh, how Sri Lanka is evolving. If you do a study on, say, Vietnam or India, you can see how these guys are slowly moving in. Unfortunately, we're about 5 years behind. So projects such as the port city represent more just than real estate. It's unfortunate where it is now, but you're seeing movement now on it. See, they represent a new urban narrative. Investors are drawn to environments that are more master plan, internationally benchmarked, and future ready. This capital is very pertinent. It is strategic. It's looking at Sri Lanka not only as a recovering economy, but as a long-term positioning play within the Indian Ocean itself. If you look at the future of commercial real estate, again, in my opinion, we are moving away from this generic office towards a more, how would I say it, an experience driven environment. Investors are focusing more on grade A office spaces. We've got clients who can't find any office space for about 6 to 8,000 square foot as we speak. So that's a good sign. Then you have the ESG compliant buildings. You have got integrated live, work, play ecosystems. See, the future uh, commercial assets is not just about the floor area. It's about adaptability, technology integration, wellness, sustainability. And across Southeast Asia, institutional capital is targeting resilience, income producing assets, and Sri Lanka will increasingly and very quickly align to these standards.
So Nilesh, on commercial real estate, so the flexible office space concept has been gathering its momentum. Do you know if it's the large corporations, have they embraced it as well, or are we still looking at the startups?
No, you're looking at the large corporations, although they are set in their ways. See, what we need to understand is that you can create a space, but you need to tame the beast to utilize that space. So we can always create a flexible, whatever you want to say, kind of space. But if the user is not adaptable, then you will see a flaw in it. Now you are getting Gen Z or guys coming in where their culture is very adaptable. So that is what you're seeing the movement with. That is where your startups are embracing this. So it'll take a little bit of time, but when you don't have an option, then people will fall in line.
Yeah. Yeah, I think there was a bit of a pushback against work from home in the last couple of years, especially amongst the big corporates that we have been speaking to, with many of them demanding that their teams come back to the office. So there might be a bunch of generational forces here at play.
See, but Roshan, if you really look at it, see, you'll have different age segments. Everybody wants to stay home with their kids. Everybody is conscious about going to the gym. Everybody likes to eat their home cooked food. So as architects, what we need to do is that we need to accommodate for that. We can't plug something from the West here and say, run with this. So it is more than a design, it's more of a social, it's more of how well you could read the person or read the sector, and it'll change from different sectors. But people are adapting. It's a matter of time.
Absolutely. And remember, Sri Lanka is a highly globalized, uh, global village integrated society. We have, by our latest estimates, 2 million Sri Lankans who live and work overseas, but still have bank accounts and properties and whatnot back in Sri Lanka. So that makes it very open to getting these ideas and things, right? And I think you guys are aware we had a investor forum largely targeting the diaspora communities a couple of months ago, and it was a stunning level of interest and turnout, which we tried to understand in the context of two very important things. And I think this is part of the demand for real estate. The first one is the confidence level in the new government is very high. The people out there, the Sri Lankan diaspora, genuinely believe that the new government represents a breakaway from the corruption and the banana republic type politics of the past, and they are voting with their feet. They're coming. They want to learn more about how to be involved in Sri Lanka's development, and this is reflected in all members of the diaspora. Whereas previously, some of the ethnic minority members of our diaspora were hesitant to be involved given the overtly racist stance of some of the politicians in the past. That has given way to a great level of optimism. The second one is that, given the crisis a few years ago, there was a second wave of outward migration. And this wave of people seem to have a much more Sri Lanka-centric view of in their plans and their aspirations and their investments compared to the ones who left through the 60s and 70s and 80s. So these are good signs for the domestic economy and the real estate sector because a dynamic diaspora can be a major driving force. But on the flip side of it, a lot of people ask me, okay, what does real estate do to improve the lot of your average person, a citizen of Sri Lanka, right? Especially given a time when the real wages of the average person have not yet fully recovered from the pandemic level, I would say, the pre-pandemic level. Romali mentioned that in the construction industry, there is potential for trickle down. Just going to ask you guys to think on your feet for a minute. How do you feel the real estate and construction industry can play a greater role to benefit a wider segment of community, including maybe getting into affordable housing? And I'm going to start with Romali and then get into Nilesh's views as well. Over to you, Romali.
There are several aspects to that question. So we're looking at the local market, investing in or purchasing housing in the local market itself, right? So a lot of that has to do with pricing. And my view is I'm currently not very satisfied with how the pricing works where it becomes affordable for a middle income sector. And there's a lot of complexity behind this. I don't know whether you want me to go into this, but if developers are going to focus on their P&Ls and their margins, ultimately in an ecosystem, there are people whose margins are going to get squeezed. And those margins are currently being squeezed from the contractor and the price is being shifted on to the consumers. Do I personally think housing is affordable right now? My very limited view is no, but I believe your data shows otherwise. And I have some difficulty in reconciling the two. So that's my personal view. I think if a current professional is going to buy into an apartment, again, we've had this discussion between you and I, are they going to do it to live in it or are they going to do it as an investment property where they rent it out? So these are all, as we also discussed, very personal financial decisions. I again, personally, I'm not saying this is any statistic, but I'm just saying it based on perception. I do not think the middle class can leverage, buy an apartment, expect that asset to increase in value, have a year-on-year yield that beats the fixed deposit rate. And I think, again, it's a confusion of liquidity versus asset value and your balance sheet, your individual balance sheet. So I don't think we have understood this really well. That's my personal view. I don't know whether that answers your question. I don't think it's going well for the middle class.
Okay, actually, you kind of touched on something that I was going to move into, but before I go into get Nilesh's view, let me just share some data since you've mentioned it. According to Research Intelligence Unit's data, and we focus on the primary market because it gives us a 96% level of accuracy, right? So if you take the tier 1 apartments, the most luxurious segment, it has gone up by 2% year on year. But here we're talking about the entry price levels, not capital gains, right? And in tier 2, it has gone up by 3%, the projects in Colombo City, but -2 in the suburbs. So again, we're talking about the prices at which new projects are launched. In tier 3, it's +2%, in Colombo City and plus 3% in the suburbs. For gated housing, it's a plus 11%. And all of these are in the suburbs, right? There are no gated housing community projects in the city. And similarly with plotted lands, up 5%. So what we're seeing is that I think within the organized real estate sector, which largely caters to upper, middle, and higher levels of income, the market is not in that euphoric state that we saw it some years ago, but are adjusting their prices. And perhaps Sri Lanka is going towards a stage where apartments are going to be more affordable. This said, there are lots of people, and I don't want to mention names, but claiming that house prices up 25%, and apartment prices are 15%, and 42% for lands. I mean, these are all plucked from the sky. If they're going to put this kind of data, please say that you're basing this on asking prices. At best, it may represent sentiments on real estate, but are they deal closure prices? No, hell no. It is misleading to the market, and I would urge them to, at least if you're going to put this data, at least have it on your legend and your access that you're talking about asking prices, which are completely different. Right, had to get that out of the system. I'm going to turn to Nilesh. How do we make real estate? How can we leverage local and foreign developers to address mid-income and social housing? I know you were involved in projects using, like, as they say, the Tata model. Can you explain what that is and how we could use it in Sri Lanka?
Right, guys. So, my straight answer to this is policy, policy, policy. From where we decide, select a site, procure material, contractors, architects, and these things. If our policies are not aligned, you will not, because the left hand doesn't know what the right hand is doing, which is actually the biggest issue. So it's ad hoc decisions made without a long-term social, economic, any type of impact. So going to what you were talking or what you had asked about, the redevelopment concept. So the redevelopment concept, let me give you very quickly a scenario. There is a large land parcel in Colombo, right? When we worked with the US Embassy, they needed a 6-acre property. Why? Because they wanted to consolidate all their, from USA to the embassy to all of these guys together. There was no available property that they could even purchase. So we developed a model in 2012 where we looked at, you get a large land parcel purely because it is, now I have to be very sensitive in this way I say this, somewhat underdeveloped, but it doesn't meet with the regulations and the needs of a city dweller. So there is communal bathing with drug addicts and children. If there is a fire, you're at very high risk. If you don't have secure parking, you have ad hoc electricity, water connections. You are dependent on underhand dealings just for your basic existence. So we looked at a model where we have a large land parcel. We identified, and this particular model, the people were not low income; they were middle income, doctors, lawyers. So they had that, and it's in the heart of the city. So they didn't need to do anything drastic. So then we identified them along with the authorities. and we earmarked exactly what they have. Now, the policy states that for a habitable house, you need to have X amount of square foot, you need to have Y amount of open space, blah, blah, blah. So, what we did was we identified each and every person, allocated more than what they actually owned or rented or had, or people living in communities, 10 families in a 1,000 square foot house. Sorry, 10 people, I correct myself. 10 people in a 1,000 square foot house. We identified this, we gave them more than what they require, and we proposed a development where it is self-sustaining. How do you do that? You identify the commercial angle of these developments and you ensure that that is a monthly cash flow fund generating concept where the common areas, the parking, everything is looked after in a development that any other person in Colombo would want to live in. So you're bringing their social standard up, but in most instances, they may not be able to sustain because the area that we identified, the actual owners from back in decades don't live there. They have rented it out, moved out of Colombo. Now you have the people who are working in Colombo living there. Then you have the land, large land parcel. You have identified a smaller land parcel, again within regulations, and built high. Now, the only problem that we as architects felt was the problem is that how do you teach or how do you climatize living more than third, fourth, fifth, sixth, seventh, eighth floors when you have always touched your feet on the ground? I still feel we haven't hit the nail on the head there, but it works. I mean, so I think that's another debate that we need to go into to understand how it is, and it cannot happen overnight.
I
So,
think there's a important point that Nilesh is talking about that I've been thinking about in the recent past as well. You're taking people who are used to horizontal living and shoving them into a vertical structure. And there's so much that we actually don't know about them and their living conditions, which says that this is suitable. Because, for example, we are building low income housing and it makes economic sense. You're using large swaths of land in Colombo that has been populated by low income families with small land plots, right? So they have very little saleable value, and anyone who wants to live in two, three, four purchase in an area like that obviously can't afford to buy that value because it's in such an inflated price. So it does make sense for the state to then give them alternative housing and then to allow to utilize that land because as I mentioned before, land is always going to be limited. So it's a limited illiquid asset and it's one of the most valuable assets we have. But when we move these communities into high-rise buildings, where is he going to park his three-wheeler? Like, is he going to take it in the lift and bring it up and keep it in front of the apartment that you've assigned to him? No.
I
So
think, Romali, you've you've actually nailed it. One of the most important factors, but then there is a balance that we need to try and achieve. Now,
absolutely.
on the one hand, we don't want a city where the people who come and do the cleaning of the office in the morning or, clean the streets, keep the streets clean, have to come on a 3 hour commute from somewhere really far away because they can't afford to live in the city, right? Our efficiency, congestion, and all kinds of other problems will only worsen in that scenario whereas we already have a working class within the city. So don't you think maybe, climatizing them to live vertically? I mean, the West in the UK, council houses started springing up in the 70s and 60s, and, people were living vertically. Um, don't you think that is something that we have to trade off inevitably? given the
Absolutely.
scarcity of land.
For sure. Like I understand the economic value of it and I understand the rationale and cognitively I can see that that's where we have to go. But it's what Nilesh says, there's a lot of soft issues that we still haven't found the formula for. Now, here's what I'm thinking and hypothesizing this to the future. You currently now have in the hill areas, entire soil rights disappeared overnight. So
Mm.
if you can even conceptualize it, as a lawyer, I can't. I had a land, I had a value. It's not there anymore. Where is it? It's not there. It's just gone. It's just value wiped out of your personal assets. So now the government is thinking about rehousing them in vertical structures. But some of the conversations that it's taking place is, how high are we going to build? Um, Are we going to just go to 4 levels? After that, again, as Nilesh says, regulation comes in, you have to put lifts, you have to have common areas. So it's a balance between these economic needs. Just one more thing I'd like to add, which was touched upon before. None of this matters if our building and our planning and our policy is going to be related to electoral cycles.
Mm.
So every 4 years, we can't change our mind about the infrastructure we're building. And when you're looking at foreign investors, yes, tax breaks look amazing, all of that is fine. But eventually, what really matters is this a politically stable country? Can you remit the money you brought in here? Is there ease of doing business? As you mentioned, can I litigate on my property rights and have a sustainable, predictable outcome? And will the laws that are taking place now remain so that I can do a long-term investment? So
Absolutely.
it's very circular. You mentioned, okay, we have blue collar workers who are coming and traveling into work in Colombo because they no longer can afford it. What are we missing here? We are missing a really good public transport system that's not based on buses, but are based on scheduled trains, light rail trains that come in and out of the city. So I 100% agree with what Nilesh is saying. It has to be a long-term, sustainable, well thought out, well-planned ecosystem structure that comes as a national development policy. And you can't deviate from that based on political requirement. So if we can balance that, that's I think currently where we are with what we need to do. And it's a lot of mind time for
Yeah,
this.
absolutely. And also you'll have a clash between planning and the markets. For example, the apartments that were built, I think recently in Colombo, were very small for the blue collar workers, but they themselves, many of them find it more lucrative to rent those out and still go and live very far away.
Absolutely. Yeah.
So
And
don't
yeah,
achieve the objective, right?
one other thing I'd like to say about development is, and there's a very strange thing that I'm noticing in the market, and we can go into it later if you don't want to touch upon it now. There's large scale risk shifting to contractors without the adequate price. So I still argue that we are not in the correct pricing point for construction. And if you want, we can go into that in a little bit more detail later.
I think that will have to be in part two. We have already run out of time, but I've got a few more questions. Nilesh, did you want to add anything else to what Romali
Yeah.
said?
So from
Um,
the
yeah.
just to close up the previous discussion, how we looked at it was we needed to create a win-win-win model. So you have these uh, middle income families who are stuck in a circumstance where they can't do anything because of the community, because of the setting they are in. So when a developer goes in there and does a development where you get a property that has a deed that you can give as a dowry, you have your parking, you have your lifts where you don't have to pay, you have your access, you have a steady income generation. That's a real win for the people in that area. Again, I will say, how do you teach them to live vertically? That's a separate one. When you go into the developer doesn't cannot find a land parcel of this size. So you are finding something, and then you will get more of a structured development, sustainability, with the ecosystem to go. And in most cases, the roads, the bridges, are accommodated. The infrastructure, the sewerage, everything is accommodated for this because the developer has to pay for it.
Mm.
And the government sits pretty in the middle, getting the developer to build and pay for the relocation or redevelopment housing, while they play a role of a moderator and the developer gets a large land parcel. So it's the first step towards where we could go. I'm not saying
Absolutely.
this is the right thing. I'm not saying it has been done correctly or done wrongly, but it is a step.
Yeah,
And it makes
absolutely.
economic sense to take that step. How we take it is still
Correct.
fine-tuning.
I mean, it's not rocket science in the Maldives, for example, in the latest reclamation in Hulumale over the last 10 years. We've seen a lot of instances where the government told foreign developers, we're going to give you two plots. We want you to build social housing on this plot over here because you can utilize economies of scale because you're going to have a second plot where you can build and sell whatever you want. So when they develop two plots simultaneously, they can enjoy certain cost saving as well, right? Especially from a foreign investor perspective.
I'm happy to say or to note that that concept evolved after, if you check your timeline, after what Sri Lanka did.
Okay. You
So
mean it
that
started first in Sri Lanka?
it started in Sri Lanka first.
If you
Okay.
want to
Check
know
your
when
timeline and see.
exactly, you should look into the State Acquisition Act. That will give you a good example of where we started
Which
shifting.
year was that, Romali?
I would think we have
I
AI.
think 2011.
Okay, but no, Tata is attributed to have widely uses in Mumbai as well, right? With the slums.
Yes.
Yeah. Um, okay, that moves us nicely on to the next question. And we are running out of time, so I'm going to ask you both to be brief.
Mm.
If you had to pick an area to hedge your bets in Sri Lanka for real estate development in the next 5 to 10 years, and I'm okay for you to take a personal position on this, as in where you're going to make money, or from a policy perspective where you think there's potential and therefore that area needs to be developed. Who wants to take this one first? Go for it, Nilesh.
All right. Um, Romali, all right if I step in?
Go
Super.
for it.
Right. Okay. So I'm actually telling you this because we've got a lot of expression of interest along these lines. So if I had to pick one area or region in Sri Lanka that I'm most optimistic about the future of real estate growth, I think it would be the Greater Colombo periphery urban belt or the Colombo metropolitan region that is emerging corridors and that needs and that, it's not rocket science. That's what happens. You have Manhattan, you have New Jersey. It happens globally and it's been happening for forever. But let me explain why. So Sri Lankan real estate market is in a phase, again, personal opinion, of a renewed confidence and structural recovery. So after a period of volatility, we're now seeing stronger investor interest, improved access to credit in some instances, a sustainable macroeconomic environment, and all of which are key factors or foundations for sustainable property growth. So if you look at, while the heart of Colombo will always be important and will always govern the property prices, the suburban corridors such as Maharagama, Kottava, Piliyandala, Aturugiriya, Homagama, similar nodes. And we're seeing most of the dynamic momentum. I'm not saying that it is high-end housing, but it is housing. It is real estate. There is movement. So I think it's because of a combination of a strong infrastructure connectivity to the capital, because most of the people would have to live outside to come. So it's an automatic build of the infrastructure which is already there. So as an example, I've got a guy from office who comes every day to work from Avisavella. And he is happy as Larry because in front of his house he gets into a train, and I'm in Colombo, and he lands 20 minutes away in a train station, and he walks here. He's covered his steps. It works, then comparatively more affordable land prices demand both families seeking quality living environments and investors targeting appreciation. So it can be a shift in buyer preference towards, suburban space and quality of life.
So, Nilesh, do you think, as is the case in some of the advanced countries, do you think this development of the outer belt will be accompanied by commercial and retail developments to keep the pressure of commuting within regional nodes around the capital, or will it still be the same?
Not yet. See,
Right.
because everybody wants to be in Colombo, and your ROI on commercial can be a little bit slow unless you want to open a little kade and sell a cup of tea. But I first think that, see, if you see any main road, you see the Kandy Road. Why is it busy? Because there is a lot of trade happening on the Kandy Road. So the road develops, the arteries are made, and the trade comes in, right? So all of these roads, I think commercial will take a little bit longer. First thing is you need to live there. You need to understand that. Then you'll get your Keels, your um, um, Cargills, all of these guys slowly popping up. Then you will get high density nodes like Maharagama, Kiribatkoda. You'll get that also. So it's an evolution, and it's
But I'm
really.
not sure that's what I meant. I mean, I'm not a big fan of vertical developments because I find
Mhm.
they're eyesores. I think Sri Lanka can have more green spaces and concentrated points that
Mhm.
accommodate parking. And I mean, you can still have your small traders, but isn't it possible to have them in little concentrated zones and free up land for greening and parks and green cover and less horizontal? I'm just putting it
I,
out
I
there. It's a
think
long
I
way.
think we are still blessed. If you go out 20 kilometers or not even 10 kilometers out of Colombo, I think we are still blessed with green patches. We still haven't abused that part of our ecosystem as yet. So I
Okay.
think yes, you can adopt it, provided again we go back to policies.
Okay, I get that. Thanks. People who want to know more about Nilesh's specific tips should DM him for your investment tips. Uh, Over to you, Romali.
Um, Absolutely agree with what Nilesh is saying. One more thing I'd like to go back to the Land Acquisition Act. The initial version of it was passed in 1950. So the state has been acquiring land and redistributing them now close to like 80 plus years. You saw a lot of that happening in the 80s. It's redistribution of land across the broader spectrum. And currently, the state is the largest owner of land, owning above 85%. That's why it's such high in value. If you want to extend that, all the litigation that's in court is actually only about 15% of the land. So that's how inefficient we are at transferring land and protecting land rights. In terms of what Nilesh said, again, 100% agree. It's a circular argument again. If you develop the infrastructure, sometimes the communities also come there. So that's the opposite of what he's saying, where, if there's a community there, then the infrastructure will come. That's also one method. The other method I'd like to highlight is prior to the Southern Expressway, the only tourist community that was built was Benputter, which was a concentrated government project to do that with architects like Jeffrey Bauer. Once you started building the Southern Expressway, you then expanded the catchment area of that development to Valigama, to Mirissa, that's going past to Pangong now. Areas that would take 3 to 4 hours to travel to, now accessible in 2 hours, and look at the development that has created. So now the next phase, to answer your question specifically, now the government is developing the Central Expressway. Now, one thing I want to say is why we are so perceptible to electoral cycles is this went all the way to Hambantota. And a bunch of people went and invested in Hambantota. Now we've abandoned that. Now we're heading towards the center of the country, right, with the Central Expressway too. Along with that, you will have big booms. Kurnagal is going to boom in a big way. Once this starts getting access, it makes sense. The sad part about this is when you're looking at all three expressways, the highest profitable expressway was actually Katunai. So we should have really started with that. Second should have been the Central Expressway because of its connectivity to agriculture. And thirdly should have been the Southern Expressway, first to go, stop there, and then build the rest. But because of our orientation, we've gone about it in the reverse order. So that's one thing we have to think about when we're building infrastructure. Second thing I'd like to say about that is connectivity, not building roads, but building roads that create connectivity. So when you're taking funds from ADB and building rural roads, asphalting them, amazing quality, nobody's using them, that's a wasted investment. So whatever you're building, it has to create that connectivity and access roads that gets you onto the main roads, gets you onto the transport points. The final thing I would say is you asked where do you think the development is. As a contractor, we look at it a little bit differently because we are in infrastructure, factory, commercial, residential, as well as high rise, right? So when we're looking at that, for contractors, actually what's been popping up a lot is commercial buildings and factory buildings. And factory buildings, again, as Nilesh was saying, not close to the city, but in the export-oriented zones. So at the moment, we're building in the eastern province because that's where the BOI zones are. We're seeing a lot of interest in the existing BOI zones around, the greater area of Colombo with the factories that are coming up and are expanding. You can see that pent-up frustration supply that's been extending out. In terms of real estate, I don't think it's good news for the contractor, mainly because the real estate developers are building themselves directly. So there isn't really much of a gain there for us. So our gains are going to come from infrastructure. Our gains are going to come from expansion of business. So that is factories and commercial buildings. And whilst real estate will continue to expand, that's not an area that a lot of contractors can penetrate because if you look at the locally available contractors, how many of them are actually qualified to build high rises is still a question. So it's a lot of mixed messages I'm giving here, but that's the overall span of where I think the next development stage is.
Your holistic approach, I think, is very appropriate now. And you mentioned Jaffna and these industrial zones. So during a recent research project, I looked at the impact of Sri Lanka's industrial policy through the 90s and before that, and the massive impact projects like Katunayaka, Sitawaka, and Horana, I think Pallekele and Kandy had, directly it had a massive impact on the economy because manufacturing is an important, one could argue, vital facet of the country's development in a sustainable way, right? Tourism's great, but it has all the vulnerabilities that we have already witnessed. Countries that have manufactured like Vietnam, Cambodia, and all the industrialized countries had to go down this path. Even Singapore went through a process of producing things. Sri Lanka, sadly, has fallen back in this regard and needs to get back to some of the great work that people did, even while there was a civil war going on. People from the BOI went around the world attracting people to come and build things here. And the impact that has on real estate from a community up perspective, right? From what you do, from building roads, from building factories, and then the demand that arises from it naturally leads to gated housing and things that we have seen. So that's an area we hope policymakers pick up on. Right, we're coming to the end. I'm gonna, since the two of you together represent more than a century of work at the top of your professions in Sri Lanka, if you had to pick an area to expand into in Asia or even beyond, where would it be and why would you go there? Romali.
Okay.
Yeah.
I would have preferred if Nilesh goes first because my answer is going to be entirely different. So quantity surveyors and architects and engineers that are not aligned to a company. So there are firms that provide services. I think it has absolute potential to go wherever they think their mind power can dominate. When you're a main contractor, it's not that easy. You carry with you a world of risk. So if you're a contractor and the government narrative is go outside of the market and find jobs and bring back dollars, I don't think that's feasible. The amount of risk a main contractor takes going into another market is immense, and most likely won't make a profit from the first two projects anyway. They're just breaking into the market. My personal view is if a contractor is going out of the country, go to a country that is less regulated than the country you're succeeding. If you go to a higher regulated country, the entry to barriers are much higher and you have to exponentially perform to survive that, or go into a smaller market where you have a very specific segmented way of performing and perform there. So either go to a country that has lesser developed infrastructure capability and less capable contractors, not that much access to material, because that's where you can take a higher risk, higher reward. Do not, my personal view is if you go into countries that are already booming, that are attracting a lot of international contractors, you're going to struggle a lot unless you can give a niche service like MEP. So if you're the main contractor, not a rosy picture, sorry.
Actually, emerging frontier markets are where some of probably a handful of Sri Lankan large developers and contractors have gone. Some of the
Absolutely.
markets.
You can see none of them are in Thailand because they have good construction.
Yeah, exactly. So that's a very good point. Thank you for that. Nilesh, over to you.
Right. From an architect's or a master planner point of view, I think it's a little bit more easier for us because of regulations in other countries. So there are building codes that has got to be followed. So for us, I see, and we are into this as well, is we as the architects or the master planners are trained to understand the regulations of most countries. And due to colonization, Southeast Asia, most of it has got an undertone of the British system in regulations. So it's easy for us to grasp into that. So I don't see a lot of architects moving into structural or MEP because those are more country orientated. And also it's more how you do it and not do it by the book kind of attitude you have, so and that is, you see that in Southeast Asia a lot. So you have got the British standards that you follow, but there are different standards that you adapt to in each country depending on the situation, how it is. I think we need to, as architects or planners, we need to focus on Southeast Asia and GCC. And guys, the money is in Southeast Asia. So we don't need to look too far.
So you guys are already there, right? In Southeast Asia.
We are there, but we only offer architectural and master planning services because that's our forte. And we also have an overview of the structure and the MEP because it has a direct impact on what our product would be. But that's a very generic thing that we look into.
Okay, I think, the setup costs would be very different between the two industries that you represent.
Yeah, and you could work remotely and it's accepted now. And I mean, in hindsight, COVID has paved this wonderful avenue of working remotely, and then now you're a global entity sitting in your office. This is brilliant.
Okay, well, that's a positive. And yeah, thank you. We have, I think, covered real estate from one end to the other. Thanks to your expert views and opinions that you shared. Thank you so much for joining us today. and hope to have you back again soon, because this was a really fascinating discussion, not least because you represent two sides of an industry from a very different perspective. Big thank you to Team RIU again for generating the data, and the team to put us all together. And a very big thank you to our sponsor, Fitzer, Sri Lanka's first private budget airline. They currently fly to Dubai, Maldives, KL, and Dhaka. And they have now started business class. And they are planning to add 3 more destinations to their itinerary. So thank you very much to Fitzer, and thank you to my guests and Team RIU once again. And God bless you all. Have a great day.
All right. See you guys. Thanks.
Bye.
Bye-bye.